Richard, we just came out with our 2019 commercial real estate outlook, and notwithstanding the fact that we've been predicting the next recession is 2 years away for the last 5 years, it still seems as though next year is going to be good and maybe going into 2020. What's going on, Richard?
Well, it looks like inflation is under control, and that puts the lid on interest rate rises. We've also got very confident consumers, particularly in America, and we've got a business environment which is very favourable to investment. So all of those things add up to a really good year for growth.
One of the things that makes me particularly optimistic, not just about growth, but about the commercial real estate industry specifically, is capital markets, where while we're not at a record level for international capital flows, we're seeing a ton of it and a diverse amount of it, even though the Chinese capital has fallen off. We've seen our Canadian friends, which have always been our #1 partner, pick it up, but also Singapore capital, which is not only greater in volume, but also the markets that they're looking at. That combined with a deep and diverse debt capital markets, where particularly non-bank financial institutions are providing very inexpensive capital, even when you get to some of the riskier parts of the capital stack, makes me very optimistic for 19.
Well, I would agree with you, Spence. We've got an emerging middle class globally who are saving more for their pensions, and that just gives you a supply of capital that's never ending.
Tell me what you think about office and industrial.
This is the most exciting late cycle for offices I've seen in 30 years. And it's all around technology, it's around agility, it's around businesses occupying space in new ways. And it's unlocked a huge amount of demand for the office sector, which combined with relatively low supply pipeline means that the outlook for offices is pretty good. And then the same is true, it's around technology in the industrial sector as well. We've got a switch from bricks and mortar retail towards e-commerce, and that continues apace, and that's just driving fundamental demand for logistics and last mile logistics as well. And in addition, very interestingly, in the global data that we see, that prime industrial yields have just slipped below prime retail yields for the first time. So overwhelming investor demand for industrial and logistics assets.
Well, you know, I think that's a great way to segue into retail, because I think the merger between retail and industrial is showing up not just in the distribution of goods, but also, as you suggested, for capital. But I want to make one point very clear about what we saw in 2018 and what we expect for 19, is that fundamentals for institutional grade retail did very, very well. We expect that to continue because the primary disruptor of retail really isn't e-commerce, it's demographic shifts. It's shifts of people from secondary locations into primary, but also demographically, millennials delaying many lifestyle choices to get married, have kids, where they would buy goods differently. So we are optimistic for retail in 2019. We also like multifamily in 2019, though I will say we are seeing some cautionary signs in the Class A segment where there's been a little bit of overbuilding. That said, B and C industrial, and in particular workforce housing, looks very attractive. Notwithstanding some softness in some of the asset types, particularly A and CBD, we believe that 2019 is going to be a great year. CBRE's 2019 U.S. real estate outlook is out. Sum it up for us in a sentence, Richard.
I think it's going to be politically noisy, but it'll be an economically good year, and that will feed through into a very good year for commercial real estate.
CBRE's 2019 U.S. real estate market outlook is out. Please pick it up to learn more.